In the previous episode, we walked through how to take an idea from its infancy and turn it into something tangible. We started with a simple concept and converted it into an indicator using Claude, used TradingView to visualize it and build some conviction, and then took the next step of turning that into a strategy with clearly defined entries and exit rules. But for me, that's still less than half the game, because building a strategy is one thing. Understanding whether it actually has an edge is something else entirely. And that comes from analyzing the output, slicing the data, digging into the trade logs, and figuring out whether the strategy works, where it does, and why. That's what this second part is all about. We'll start from a point where you already have a strategy in place, and then focus on what comes next, how to analyze it, how to break it down, and how to refine it further. We'll also explore an alternative approach, that is, how you can pull the OHLC data from TradingView and run the entire backtesting workflow on Claude itself. From building the indicator to coding the strategy to running and analyzing the backtest, without really relying on TradingView. Each approach has its own advantages, and we'll look at that as well. I'm your host, Sandeep Rao, and with that, let's get started. In this episode, we'll continue with the same example from the previous part, the Heikin-Ashi-based strategy. We'll start with the first approach, exporting the trade log from TradingView and analyzing it using Claude. We'll see what insights we can extract and whether the strategy shows any promise. And then we'll move to a more comprehensive approach, working directly with raw OHLC data from TradingView and building and testing the entire strategy within Claude itself. As always, before I get started, the disclaimer. The ideas and examples shared in this episode are strictly for educational and illustrative purposes only. Nothing discussed here should be construed as a recommendation, investment advice, or a solicitation to trade. Trading in derivatives involves significant risk and can result in complete loss of capital. The examples and data presented are meant to explain market behavior, not to suggest that similar outcomes will occur in the future. Outside of risk disclaimers, note that I will be using third-party tools like TradingView Premium and Claude AI's Pro Plan to demonstrate coding of custom indicators and analyzing data that we would be referring to in this video. So let's start with the first approach, and we are here in TradingView right now. So the first step is we get to TradingView and we have the strategy over here. So what we would do is go to strategy report. And in strategy report, I need 10 years of data. So I'll just make sure I have 10 years. This is 2016 Jan and all the way till today. So yeah, so that's what it is. Okay, so we got this data here and I'll download it. So I got the data over here. And then I am going to Claude now. So open a new conversation here with Claude, upload the data I downloaded. Okay, I'll give a prompt to Claude to parse the file and let me know what you see in this particular file. And yeah, before we get started, let's parse it once. So I'm using Whisper Flow to give my voice to text, and that's the reason why you see this. Okay, so the step one is always is better to parse the file and check if Claude is able to read. Okay, we're good so far. So it's done a good job. It's read, it knows that it's a Heikin-Ashi strategy, it's spanning this period. There are 718 trades, awesome, all of that. It has some bit of columns and all that, which it has figured out. Okay, so step one, what I want you to do is start with drawing or plotting an equity and drawdown curve. And when you do that, I would need it separately for long trades, separately for short trades, and then a combined equity and drawdown curve too. Okay, so right now what you're seeing is a combined equity curve. And when I say combined equity curve, what I mean is it includes both long and short trades. As always, when you're analyzing a trade log, it's better to look at long and short separately, and that is why we have these two tabs as well. So the long is a clean, nice equity curve, as you can see. So the short, as you can see, is quite choppy. A large part of the heavy lifting is being done by the long only. Okay, so which is true for most equity strategies, but short side also provides protection in times where, as you can see, most recently when the markets have been going down, it's a short side which kind of covered for a lot of the crash. So that said, yeah, so we got these. So then we need we also need other trading or strategy metrics. We also need to know about other trading metrics. So given that I'm lazy, I'm going to use a simple method to get Claude to give me all the metrics that I need. So what I would do is I go to my own videos, okay, and then I would pick one of the videos where I have shown some strategy. Okay, for example, I would take the Nifty and gold strategy here. Okay, and I would take a screenshot of these metrics. Okay, and give it to Claude. Okay, and then tell Claude, take these metrics and calculate it for me. Again, combined long only and short only, everything in points. And you don't have to use the rupee symbol because these are not rupees, this is all points. Okay, so when you are calculating these metrics, follow the same approach as you did for the equity curve. So I would need one set of metrics for the combined log and one set for long only and for short only separately. So that we can compare the metrics across these three. And just a note, these are not rupees but points because we are not using lot sizes to convert them to rupees. So there you go, we've got all the metrics in place. The combined points are like 22k points, long only is contributing in a major way, 19k points come from there. And you got all other metrics which we asked for it in terms of total trades to average win points, average loss points, and all of that. So one way, this is one way to analyze data, which is trade log data. And as you can see, it does a way better job than using the native TradingView backtesting engine. So this is one approach. This is what we could do. The next approach that we would follow, which we would figure out, is to use the OHLC data from TradingView itself. What we've done so far is a relatively simple analysis of the trade log, which is useful. But we can take this a step further. Instead of relying only on the trade log, we can run the entire backtest within Claude itself using raw OHLC data from TradingView. So the next question is, how do we go about doing that? Well, that's exactly what we'll explore next. So when I say we would use only the OHLC data from TradingView, what it means is we'll get the data out of TradingView and ask Claude to code the strategy and backtest it for us. That's what we are going to do. Okay, so we would do a simple download of data here. So we go here, and one way to do that is we go 10 years back. So here I would go 10 years back. This is on hourly, as you can see. Okay, so I go 10 years back, and okay, so we are somewhere in 2016. We are 10 years back right now, and then I would go and download chart data. Okay, so I've got Nifty 60 minutes ISO time, and I'm downloading chart data. So I've got the chart data downloaded. So I'll go back now and start a new chat. Let's upload the OHLC data on Claude. And there you go. And we'll give it a prompt. Can you double check if the OHLC data, which is an hourly OHLC data, is correct? And let me know what look back do you have, the max look back that you have. Yes, you can clean those and keep only the filtered ones. Cool. So we clean the data. Now the next step is to ask Claude to run or create a backtest and give us the metrics. Okay, so we will ask Claude to code a very simple strategy, and this is a simple moving average crossover on 50 period EMA. Okay, Can you backtest a moving average crossover with a 50 period EMA, and the entry would be on close? So long entry when the price closes above 50 period EMA, and long exit once the price closes below the 50 period EMA, and then it's a stop and reverse system. So the moment the price closes below the 50 period EMA, we go short. Same thing happens for long as well. And I need two things right now, two metrics which I would want to know. One is total points, and then I would also want to know the return to max drawdown ratio. Okay, so which means total points divided by the max drawdown in points. So everything is in points. Okay, so yeah, so give me that metric for a look back of 50. So now Claude is working on backtesting it. So you got total of 1051 trades, total points is 26,861, max drawdown is 2,518 point, return to max drawdown is 10.69, which is fine. Okay, now ideally speaking, what you should do is, for the lack of time I'm not doing it, you could ask Claude to download a trade log and match it on the real chart to see if the data is correct. Okay, so I'll skip that, but you do it. And then I would now ask Claude to kind of sweep through multiple lookbacks so that we know which one is the optimal lookback for a trend following strategy. So can you sweep through different EMAs with a step of 10? For example, 10, 20, 30, 40, 50, 60, 70, all the way till 100, and give me all the metrics that you just gave so that we can compare which one is better in terms of return to max drawdown ratio. Okay, so what we did was a quick sweep here, and as you can see, return to max drawdown for different EMAs and different lookbacks. So as you can see in this backtest, 30 seems to be the best, and 40 being the closest, but there's a difference in terms of the number of trades. If you see, 40 has got lesser trades, but nevertheless, the point that I'm trying to make over here is you can get these metrics and choose the ideal EMA, and then download the trade log, and you can ask for all other metrics as well along with it. So this is one. Now I would want, let's say, compare a 30 period look back, return to max drawdown with simple SuperTrend indicator with its standard 10 and 3 look back, and let's compare those. Can you run a backtest of using a SuperTrend 10, 3 parameters on the same data set on hourly for me to check if it works better in terms of total points, max drawdown, and return to max drawdown compared to, let's say, a 30 period EMA? See, we got a clean comparison here. SuperTrend has got way fewer trades compared to 30 period EMA, but the return to max drawdown is very, very bad. So and so are like the total points, and the max drawdown is way more. Maybe SuperTrend is not the ideal trend filter for Nifty on an hourly time frame, and EMAs work better, and that's what it says. Okay, so once you have these metrics, you can follow the same lazy method which I gave you. Let's say you want to select EMA 30 and look at, drill down and see all other metrics as well. Okay, so one way at a very basic level, what you could do is you could just look at year-wise and month-wise cumulative points for a parameter that you choose. For example, let's say we go with EMA 30. For EMA 30, can you give me year and month-wise cumulative total points? So there you go. So we have got year and month-wise cumulative total points here. Okay, so there you go. So pretty much all years are positive, and that's what we can see over here with EMA 30. And it includes both long and short trades. You can do the same thing separately and see whether what is the impact of short trades, do they add up or not. But nevertheless, this is the table that you would get. Okay, or like we did earlier, you could just take these metrics and then ask Claude to calculate them for you. Use these metrics and give me all these metrics in points separately for long trades, short trades, and combined in points. So I did the same thing. Let's see how the metrics work for 30 period EMA. So there you go. So we got all the metrics as we had, requested. So this is 30 period EMA, and then we've got all the metrics. So again, largely contribution is from the long side. The short side contributes lesser. Win rates are slightly better on the long side than short side, all of it. Anyways, so this is what it is. You can also do another thing is what you could use multiple approaches. You can ask it to filter out based on multiple time frames. Say instead of using just one EMA, you could have two EMAs, multi time frame kind of a thing. You can practically do anything over here, but make sure that you download the trade logs eventually and compare them with real charts to see if the data is correct. It would usually be correct, but it's a good thing to do that sanity check. And that's about how you could go about backtesting a strategy entirely on Claude itself. And you could do many more things. As I said earlier, you could ask Claude to kind of include some kind of a slippage in terms of percentages. You could ask Claude to include some kind of a cost factor for trading. All of that is possible. So it's only your creativity and your, the Claude tokens that you have, which is a limiting factor. But beyond that, you could use practically, any parameter that you would want to check. You could trade that once the data is in. While I tested all of this in points, it's a lot better sometimes to see it in percentage, because especially with indexes or sometimes stocks as well, you would see that the value of the base value changes. So you would not know, a 5% gain today is very different. So one of the things which I did was I did a lot of this analysis in points, but that's not ideal always. So it's better to do it in percentages, and Claude will do it for you. So for example, a 5,000 point gain today could be very different from 5,000 point gains 10 years back. So always looking at points in terms of percentages is better than looking at absolute points. So that's another factor which you may want to keep in mind while you're running these backtests. So that brings us to the end of this episode. We looked at two things: how to analyze trade logs and how to run a full backtest using OHLC data from TradingView, all the way to generating a trade log within Claude. Now, a couple of important disclaimers before we close. What I've demonstrated here is fairly simple and basic. The intent was to show you what's possible with the LLMs today in terms of working with and analyzing data. But if you're looking to build a robust, deployable strategy, there are additional steps you need to include in your testing framework. For instance, running proper in-sample and out-sample tests, factoring in costs. Even a simple assumption like 0.025% per side can materially change results. You can go further by translating this from spot to futures or options data and account for impact costs as well. The key point is all of this is possible using Claude, but it needs to be done in a structured, methodical way. What we covered here is just the starting point, the minimum viable framework. I'm myself, as we speak, exploring Claude to help us trade better, and as I learn more, I would add more parts to this series. And one last bit about using any LLM for backtesting. Make sure you double check the trade logs with the real chart entries, because you never know what could go wrong. And before I leave you, I have this book recommendation for you. It's by one of my favorite authors and an FT columnist, Tim Harford, titled How to Make the World Add Up, in which he argues about the importance of data and data analysis in our daily lives and in our attempt to understand the world around us. In line with what Tim says in the book, if I think about it, at the end, it really comes down to your curiosity and creativity. Of course, with Claude credits being the only limiting factor. With that, I hope you found this episode useful. If you have any questions, feel free to drop them in the comments. I'll be happy to respond. Till then, take care and trade safe, and I'll be back soon with the next one.